Big bear and bull scrap over the price line trade up 27.5 handles last night, dropped it down to 391. Bid popped it. What a trade that was. Shorts are getting hammered all the way out. Once again, the exuberance of volatility can get very extreme, both to upside and downside movements based on headlines. NetEase Chinese stock up $5.12. WebMD so this is the gap up. Apple's 95-cent gap. There's another Chinese, that Sina stock gap. So here is the gap list up. And some of these stocks here, some of the retail stocks, been trying to get a move even with the Middle East problem. What people have been doing in there is putting, just don't let it keep going higher. They've been, what they've been doing the last couple of days, in day one, huge volatility, shorting it down, then buying off of the bottom, directional price movement, everything in the MMT platform. When the changes are made from weakness to strength, it's been there. It's been a trader's dream to have the volatility and directional round trip price, period. One of the things that we'll be looking at moving forward on the price line trade, once all the people get in and they get up, they get out of it, we'll be looking at the 460 put options, the 450 put options, on how they're going to take all the premium out for a premium wholesale entry and exit. One of the things that I want to tell MMTs, let's take a look at the gap open down on the Nasdaq comp. Let's see what that is. So as we look for weakness, we look for weakness. The gap down, Salix Pharmaceuticals, SLXP, down 9.87 handles, was down more. IDCC down. HTWR, Lulu, the little overbloated Lulu retail stock, down $1.72. Foster Wheeler down. The Bull, a slight gap down. Bull was at 185 up toward the highs. Came down yesterday, made a run off of those bottoms. But you see, MMTs, people that can't be patient with the tape, sliding that bid and going down and walking that dog off the bottom is there. The bull is still trying to buy the dips because they're trying to discount high oil. Well, I'm sorry, that comes into play later. Right now, when you see the amount of buy action and short cover action off of the bottom, short cover is the mechanical part of it. That's when you ride the wave. Okay? Because that's the way that move is. When they're sliding that bid up off of the top and the weakness comes back in, they're going to be in very profound price ranges for here to come. And what happens is, on the first long overdue correction in all indexes, you'll have a round of people buying up off of the bottoms, even in this environment. And the environment for the bull has changed significantly because they're going to be sitting there praying and manipulating every damn thing that they can about what's going on in the Middle East. Well, I'm sorry. Hey, GDP will come down. Price action volatility and trading is one thing as a market maker. They don't care about any of those headlines. They don't care about anything other than being the referee between the buyer and the seller. That's it. That's all. So we're going to watch the degree of sliding the bid versus walking the dog. Right now, you got stuff being walked up in here in the volatility in pre-market futures. This was down at 608. They're trying to walk it straight up. On the opening bell, when they do walk them up, you look for slide that bid immediately because that's what they've been doing on the openings. And then you've had the left side of the print going down the hill. Once they all put up the highs, so here's part of the gap futures trying to turn around in the turmoil here. It's not just this one, it's several others that are happening right now. So the trade management is on the opening bell. They go up, that 369. They make that high. The minute the ratio stops, it doesn't go higher. It's that simple. Let's do it on a kidney garden level.